The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
Yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is by Marlowe. Be strong. Go with your heart and believe in miracles, because anything can happen. Can and will happen, folks. Market-wise, let's take a look at it out here. We have the Dow down 125, Nasdaq's off 27, S&Ps are off 14, gold contract down $3, trading at $1,088 an ounce. Silver down 12 cents at $14.61 an ounce. Platinum down 3 at $9.77 an ounce. Copper down 6 pennies at $2.37 a pound. Light sweet crude off 58 cents at $48.61 a barrel. Bonds, the ever-ready bond market, folks. The money's pouring in bonds now, baby. 10-year up 9 ticks, 126.19. 30-year up 1.5 points, 154.17. They both want higher price, folks. They get the price spread. They get the juice behind the move. They're going to be going after those higher swing points. The bond market has been in a consolidation for a couple of months. King dollar down 517 ticks, trading out at 97.20. The euro up 71 at 110 rather. And excuse me. And yen is off 18 at 123.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so I'll just put this up first for the E-minis so you can see right where we are. The E-minis right now, folks, are trading out at 2094. Intraday, they just broke a swing point. They broke it with volume. It's an intraday ABC structure on the way down. And this looks like we're going to get some steam going and get into the 2085 number. That's a long way down. The Dow's down 128. That'll put the Dow down 228 within the next hour. NQs are the same way. You get two separate ABC structures on the way down. Broke the B point, broke them with volume. The NQs right now are at 4591. That's going to give you a 4580 number. That's where this baby is shaking out at this particular point. And you are coming down with volume. We're going to have out here today thus far. NYSE is already pushing 600 million, so that's going to be probably 850, 875 on the NYSE. Nasdaq has been pushing volume all day. Nasdaq, we're already at 1.5 billion. That's saying that's going to push into the 2 billion mark. Some of the okay, gold contract. Let's go over and take a look at gold. What do we have at gold? Gold's trading at 1088.70, and that is with a weak dollar, folks. You have the high volume spike low. It's going to go after that low. That's the 1080 level from Sunday night. And the sad part about this is that it's going to do it tomorrow and Friday in the gold market. And downtrends is always problematic if, in fact, you've been in a downtrend and you're coming into a Friday. And that's exactly what we're going to have. We're at 1088.70. The 1080 level will get tested. Now, King Dollar. Let's go take a look at King Dollar, because King Dollar, folks, is pulling back, has volume on the pullback, has already rejected the swing point that it was trading into. So if we put this up on a daily basis, first off, what you're going to see is this. Okay. So King Dollar on Monday, try to get into the swing point that was, there it is. It was trying to get into the swing point that had been established in June. That high swing was $98.20. We got to a price point of $98.31. You did it with dramatically lighter volume, and then you know what ended up happening, folks? You came off that high with volume. So what does that set up? That sets up, you can't bust them up. What are we going to try to do? Baby's going to try to bust them down now. And as we try to bust them down, next spot is going to be this 94.44 area. Bonds, we take a look at the bond market. Now, this is about as intense as you get. I see we're getting steam. You know, if you were listening yesterday, what I was talking about is that it's an inverted U deal. These inverted U's are really wild in basically high volatile markets. And, you know, factually, I don't know why it works. But what I've seen just over the course of so many years is that you get this inverted U, and what gets that right shoulder, like we were doing yesterday, the follow-through is intense, and that's what we're getting right now. You're getting follow-through, wide price spread, accelerated volume on the way down. You're getting follow-through with volume. They're going to take it apart, and they're going to take it apart right now, and they're not going to let anyone out. That's how these markets rock and roll. Now, let's go over and take a look at the bond market. Well, so what we have with bonds out here, bonds right now, we'll go look at the 30-year first. 30-year is trading up 1.5 points. You're at 154.17. We're going to go after the swing high tomorrow, and I expect you're going to probably blow it away. The bond market has been consolidating off its high since May 12th. We've had 3 separate signs of strength in the bond market that it wants to go higher. We're going to have another one today, and what the bond market looks like it's going to do today is this. It's going to stop right before the swing point. The swing point on the 30-year is 154.33. 23 rather. We went to 154.20 today. I suspect we're going to probably hang here. What that says, you probably jump the creek tomorrow morning. You jump the creek, that means the next mover is up to 165. We take a look at the 10-year. What we have with the 10-year is this. 10-year has done 840,000 contracts out here today. It's lagging the 30, but the 30 is what's always been pulling up the 10 anyway. Bottom line, this baby is also going to go after the 127.19 area. If you take a look at the continuous contract to get the much larger picture in bonds, folks, this is what you have. We're at 154.17. If I put this back, and we put this back 15 years, what you're going to see is that when we broke topside in a huge way, we did that in March of 2015. The 30-year went from 142 to 165. All we did is that we pulled back to 147.11. It didn't even pull back to the beginning of the move. Now what you have is that you're outside of the lower range once again. So what does that set up? That sets up at least a test of the highs, and it very well, watch this. Now, this is where it's going to get really bizarre. So if I put it 10 years, I'll put this on 5 years so we can set up, there it is. Okay, so you put this on 5 years. I'm just doing this so you can see some clarity inside what the retracement value was. The retracement from the last leg up was a 50% retracement. What does that mean? That means you can do an ABC structure on the way up, folks. And if that's what we got, an ABC structure on the way up, man, bonds are going to the moon once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow's down 140. NASDAQ off 32. S&Ps are off 16. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at the weakness and the strength inside these indices. Inside the Dow Industrials, we have the Dow down 139 right now. Putting strength into it is Cisco. That was up 59 cents. Is up 59. IBM's up 126. That's been getting crushed. Microsoft up 31, and Apple is up 8 cents. Taken away from it. On the way down, 3M is the leader on the way down. That's down $6, trading at 149.23. Caterpillar is down 290 at 76. American Express is down 214 at 76.85, and GE is down 38 at 26. Inside the NDX 100, what do we have inside the NDX 100? This is what's shaking out there. We're down $26. The strength inside the NDX 100, SanDisk. SanDisk is up $9.35. This is an equity that already had got cut in half, folks, so you get a dead cat bounce. Micron Tech is up 60 cents at $18.60. SBC Communications up $3.82. That's a nice a pop. And NXPI is up $2.34. Taken away from it, on the way down, we have Qualcomm down to $2.72 at $61.41. Google is down $23. Oh, look at that. Google's down $23 at $6.71. Marriott hotels are up off $2.51 at $74. And you get Comcast down $2 at $62.26. Let's go. I want to go over there and let's take a look. First, we'll go take a look at Google and see what's going on with Google, if we get any juice here. So, because, Google had not only gone topside, but this thing went topside in spades. Yep, right back into the gap. Whoa, baby, watch out. Okay, so Google, you talk about a tear. I mean, Google 5 days ago, well, no, the July 9th. July 9th, yeah, only the 23rd. July 9th, we're trading at $520. July 20th, you're trading at $674. Pretty intense. Today, $642. Now, Google's problem is that you're into the gap. Gaps don't stay open like this, folks, okay? Now, what is really unusual is that you don't hold the gap on the first leg down. Most of the time, this is what ends up happening. When you have a stock that gaps higher, dramatically higher, the odds of probability is even better. It gaps dramatically higher. normally you float higher, and then what ends up happening is that as you come down, okay, what ends up happening is that you get lower. As you get lower, your first leg of support ends up being at the 645 area, which would have been the low of that high, okay? So what normally happens there, you get that going, you go sideways, it bounces a little, it certainly doesn't rip right into the downdraft, and that's what we have right here. So pretty intense. Now, folks, let's go over to our man, Mr. Andy Heck, and don't forget, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, Andy's got an outstanding show right here, right after I'm off. You can get it right on your cell phone, tfnn.mobi. He also has a great newsletter. It's the Technomento Commodity Report. You can come over to our website, go into newsletters, trading newsletters. You'll see the Technomento Commodity Report. You can test drive that right here, right now, 30 days, absolutely free. What's going on, brother?
It's like a game of Chinese dominoes out there.
Yeah, the whole world is blaming the Chinese market for everything now. We go from the Greeks to the Chinese.
You had gold crack Sunday night. You have oil crack yesterday, the day before. Today, copper. I got a monthly chart of copper up here.
Okay.
Copper in the last 10 minutes of trading today went right through the recent low at 238. We traded down to 235.75. I think this copper market looks ugly for a couple of reasons. Number one, I think there are some hedge funds in trouble who might have been long copper, particularly some guys in London, Red Kite, who have been talking bullish on copper, for the last 2 years.
Yeah, we were talking about that. Yeah. Right.
I also think that, China, you have to go to China with copper because China has tremendous financing deals with copper tied up in them. Okay. In other words, they basically buy spot copper, borrow the money, sell it forward, and they keep the copper on the mainland in order to use it when the economy is good and they need it.
Yeah.
So what happens is the price of copper goes lower. It begets selling because the value of the collateral shrinks and they still have those loans out there. So I'm expecting, I think copper's gonna really surprise. I think copper can drop to $2 like really quickly here.
Yeah, no, that's 201's the next level, man.
Yeah,
and we're 237 right now, folks. Right.
That's a big move, man. That's more than 15%. It's a big move.
It's a huge move. Yeah.
And you know what? Tomorrow's Friday, Tom, and these things are coming in to Friday, sitting on cliffs here. I wouldn't be surprised to see everything really have a very ugly day. Stocks, everything. And look, the dollar's down 500 points today. And you have copper down a nickel. You have gold, can't even manage to get above unchanged here. Silver's down at this 62 level, which is a key level. Platinum is down. Palladium, everything. I'm looking for something that's up. Cotton is up 20 ticks today.
Sugar. See. And sugar got killed, but now it's up. Big deal. It's up 13 cents, right?
Exactly. Big deal.
Yeah.
Nothing is up. This is deflationary. It's really kind of ugly. It's raw material carnage here. Keep your eyes on that Aussie dollar because that Aussie dollar has some real downside here. Let's put a chart of that up for a minute because, we'll just switch it to currencies. And when you talk about commodities, the Aussie dollar is a proxy for commodity prices. And that Aussie dollar is looking as weak as I want to put a monthly chart up. It'll take a second to get it up there. But that Aussie dollar is really reflecting what's going on here. But I think you're right what you said, the last sector. At the very least, we're going to have to touch that 1080 again, that Sunday night level.
Yeah.
We go through there, it could really get, kind of hairy in the gold market.
Yeah. No, listen, there's the thing that's intriguing to me right now, and I agree that the China deal, and it makes sense that, there's so many people in China, they bought so many commodities. It's like deflationary there, but we don't have deflation happening in the United States right now, So
you're exactly right. Yeah. I mean, exactly right. Yeah. And it's the best game in town. That's why I think the U.S. dollar, although it's down 500 today, hey, that thing, we could have a vicious pop in that as well, which would really fuel the downside in some of these commodities. So it's just, I can't find any love for the bulls in any of these commodity markets today. And the fact that they're coming below support, and you know how important these support levels are, especially when we're talking about long-term support levels. Now, check out this Aussie dollar chart here. What are we down at, around 73?
Yeah.
In Aussie dollar? Look at how this thing is broken, and look at the next level here we're talking about is 66. That's a massive move for a currency. Massive move.
Yeah, and what you have, folks, is that in 2011, the baby is at 110. So 110 to 73. And, yeah, your next stop is, you get 70 cents, I guess, for a bit.
It's a currency.
The 2008 low is 60,
Yeah. Oh, I know. Hey, listen, when I went there in 2001, it was 50 cents. I remember.
Wow. Here, just hang with us a second, all right?
Sure.
Awesome. Andy Heck, Tom O'Brien, we want to hear from you, folks. Our phone number is 877-927-6648. Dow Industrials are down $1.40. Nasdaq's off 30. S&Ps are off 15.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down $1.30. You get the S&Ps off 15. The NQs are down 29. We're talking with Andy Heck, and we're talking commodities. And don't forget, right after my show today, Andy's got a great show, folks. 5 to 6. Get it right on your cell phone at TFNN.mobi. Hey, Andy. Folks, this is how bad the commodity market is right now. A story's just coming across the Bloomberg, right? And it's explaining how the bright spot in the commodity market is that natural gas hasn't been getting hit. Now, this is how crazy some writers are, folks, okay? Natural gas has been trading at this level since 2009. So why is it going to get hit?
Natural gas is under $3. If you look at
that's my point.
I mean, let's talk about natural gas. The range since 1991 is about $1 and change to $15. It's $2.81.
I know.
What are you gonna do with it?
Isn't that funny though? I mean, that's
They're looking for something to write about.
Exactly, but that's how crazy it is. I mean, it's like,
I think more significant is that cotton is holding. I mean, but that's another one. That was $2.27 a pound. It's 65 cents.
Yeah.
So, it's crazy. I think one thing that we have to watch tonight, all of us, for all markets.
okay.
We have to watch the opening in Australia into the opening in China on gold, silver, and copper. That's going to give us a lot of kind of sense of whether there's a lot of selling ahead. Maybe some hedge funds are in trouble, because that's where it generally. What happens on Thursday nights, I've noticed, is that the first move in Australia into China, if gold is down at around the 1080 level, during that time, watch out. It could be really, really ugly tomorrow. And if copper drops below today's lows, the 235.75 per pound level on the COMEX active month September contract, that's going to tell us a lot. I am particularly worried, Tom, about this collateral in China.
No, I can see that. The collateral in China totally makes sense. But check this out. This is where this gets intriguing. When we talk Australia, okay, an Australia dollar, and then you're talking silver or gold, the mines in actually Australia can make more money now than they can make when gold was 17 and 1800. And because the correlation has to do with their
the price of gold in Aussie dollar.
Well, it's their expenses. Their expenses
sure.
And so their expenses have gone down dramatically because what had happened when gold went to 1900, the Aussie dollar was $1.10, and no one could figure out, like, oh my God, these Australians are not making any money. They weren't making any money because their currency was too high.
That ain't bullish.
No, now what's really interesting, and this is what we really got to try to figure out. Australia really, it's the iron ore deal. That's bigger than anything. There's no two, So it's like, okay, so how does that correlate to, their dollar versus what China will pay for it? So
right now, I don't know if China's buying anything. They have
I agree.
Such
I think
enormous stocks.
That's the number. No, I think that's the larger number. The larger number is that, hey, bottom line is that you have buildings that either stopped or they have enough. But I think the drawdown, which you're talking about as collateralized, the thing that's crazy, man, is that China collateralized everything, man.
Of course they did. Of course they did. I mean, they have high domestic interest rates, right? Not now, but for the past couple of years. And we had very low rates. It made sense for them to borrow money in dollars, in euro, to buy these commodities, to leave them there, to sell them forward. And then they have the access to the physical when they need it.
Okay.
The problem is when the value of that collateral slips from where it's been over past years. It's like, the margin call comes knocking on the door, and then you have two choices. You pony up cash or you sell.
Listen, folks, this is, it's wild. So over the course of, let's say, 30, 40 years, right? I remember when first the Middle East, the investors came in when the oil was hitting highs, right? And that was the 80s. And first, the Middle East was supposed to take over the whole world, okay? They're going to take over the United States. Remember? They were buying everything, folks.
Of course.
Okay, they were buying everything. What ends up happening? Oil crashes, and I saw this right in Boston because I had owned a building, and I saw that, and this is it's insane. I saw the sheiks getting foreclosed on right on State Street, okay? Bang, they get foreclosed on. And I'm saying to myself, I'm scratching my head, I'm saying to myself, man, how does this work? 1 second, you think that, and they're taking over everything. Next second, someone pulls the rug, they're done. That doesn't end. Then the Japanese came in, folks, and the Japanese were supposed to own everything. Same thing happened, right? And I saw that happen. I'm saying to myself, oh my God, I got a feeling that now what you're talking about, right?
Yeah, China could be in trouble. Hey, you know what? The latest one before China, the Russians were buying all the property in places like London and other places in Europe.
Yeah.
Huge money flowing in from Russians. And hey, last year that all stopped. So
Yeah,
now
but you know what I think the difference is? This is what I think the difference is. Now, this is great. I'm glad we're talking about this. The difference is, as you were just talking about how the Chinese are leveraged, the Russians just took everything and they bought it with cash so they can make it through it. You see what I'm saying? Where the Japanese were leveraged, the Arabs were leveraged, the Chinese are leveraged. The Russians, I don't see them leveraged. You know what I'm saying?
No, I hear you.
Isn't that wild,
100%. And I agree with you.
Yeah.
I totally agree with you.
It's crazy, man.
It's crazy. You know, the other thing to watch tomorrow, Tom, if copper starts to crack, what they're going to do, because, I mean, listen, I traded in that hedge fund world at Solomon and all these places. They're going to turn and look for something for protection. And what they might do is they might really lean on silver. So if things are ugly tomorrow, silver could have a really ugly day here. Because don't forget, 1410 is really key support for silver. We're only around 46 cents above there right now. If it goes through there, it could be really ugly in silver, and that could be copper based. I mean, it's all of these metals. If we take a step back and we see what's happened over the last 4 months or so, even though the dollar corrected lower, the metals were the weakest thing in town, and they've continued 23 days into this third quarter. The metals are still the weakest segment. We're getting no bounce, no dead cat bounce there at all. So I'm very worried about this whole metal sector, and I'm talking about base metals. I'm talking about iron ore. I'm talking about precious.
If we've learned anything from 2008, if this ends up being a liquidity event, folks, which it can be, right?
All bets are off.
Everything will go down. Everything.
Absolutely.
It's not. Every stock. The only thing won't go down.
Not everything. Not everything.
Bonds.
The 30-year bond will explode.
Oh, listen, there's not enough bonds. You know, I had heard someone call into Larry's show this morning, and he was frustrated, with the bond market. And, folks, you don't have to be a technical person. Just find out, we can go right to the Fed. We don't have enough bonds. We are not over our head. That whole thing, the debt is all there. Guess what, folks? If you go to the other side of the balance sheet and the assets in the United States, there's not enough bonds to go around. So it's a supply and demand deal, man. And we're paying, if in fact there's a liquidity event happening, 2.3 on the 10-year is more expensive than the whole rest of the world.
Right. But you know what? 2.3, at least you're going to get 2.3%.
You're going to get your principal back.
You're not going to lose 40% of your capital.
Yeah, you're going to get your principal back, no doubt.
That's right.
Okay, brother, listen, you have a great one, safe one. Of course, we look forward to listening to you right here at 5 o'clock.
You too, Tom. Have a good one.
Thanks, man. Have a great one. Have a safe one. Dow right now is down 131, folks. Nasdaq's off 29. S&Ps are off 14.5. You stay right there. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We get the Dow off 119, Nasdaq's off 25, S&Ps are off 13. Now, after the bell, a lot of action out here, baby. Here we go. So we have Altera, Amazon, Marvell, Capital One, Juniper Networks, Maxim Integrated, Netgear, NetSuite, Pandora Media, Skyworks. Be interesting to see what happens with Skyworks. That got smoked when Apple went down yesterday. Starbucks, that's going to be an interesting one. TripAdvisor, VeriSign, and Visa. Okay, so there's going to be a lot of numbers after the close out here. If we go over first, let's go right over to Amazon. Amazon's going to be the monster out here, no doubt. So we take a look at Amazon. Amazon right now is at 478. Look at that, baby. So that's saying she's not going to gap this time. Wow, this will be interesting watching this thing shake out. Okay, so let's watch this. So what Amazon has done, yeah, she's pushing into lows. Okay, so Amazon last 6 months had two separate gaps. We go back to pull this back a little bit more. What you're going to see, you go back to February, Amazon was at $311, gaps up to $359. Next time it came out with numbers, Amazon was at $389, gap the following day to $452. Now, it hasn't filled either one of those gaps yet. And, you know, I had said yesterday, you know, markets love doing three-gap plays. So it's like, okay, are you going to gap up again? Now, that being said, what is happening right now is that we got to a price point today of $491. It's at $478. You didn't make a high. You don't have volume at the high, and you're coming off the high with expanded volume. Okay, here we go. So that's saying, bottom line is that Amazon is not going to, you know, basically gap once again. You know, the probability is that we go to 452, which was the high of the last gap, versus a higher high. That's going to be interesting watching this one shake out, man. Holy cow. You know, because what Amazon can do, does do, and will continue to do, Jeff Bezos just decides whether Amazon's going to make any money or not, because Amazon, folks, has taken over the retail world, and I suspect it's going to keep happening. So the way that he brings his numbers out goes like this. All he has to do is not spend money on expenses for probably a week, and what will end up happening, the amount of cash that comes in is huge, because you got to remember something. With Amazon, you're talking a large retail store. They do $100 billion a year. Now, on $100 billion, it just depends on when you have to pay your suppliers. Now, Amazon pays pretty good. Okay, they pay, you know, within the month. Bottom line, that's still $100 billion float on that's growing on a monthly basis. Not on a monthly basis, on a yearly basis. That's a big number. And that's saying that everyone gets paid within the month, right? We get paid within the month. I don't know if, how other retailers work. But the bottom line, and they continue to grow. So the growth rate on Amazon, they're looking for another 20% growth rate this year. It's pretty intense. There's no doubt about that. So we'll see where that whole thing does shake out. What we do have, and this is a decent clue, is that, let's bring this back up again. What you're going to see, if we go over to the E-mini futures, we have hit, let's see, we'll put this up in a 10-minute. When I started the program, I was explaining that it had just broken the B point of an ABC structure on the way down. Your price projection on that is 2085. Thus far, we've got to a price point of 2091. We started the program, we were at 99. So this is how this would shake out. If we hit the 85 before 4 o'clock, then it's like, okay, it's done the ABC down. Then it could do a bounce. We don't hit that 8.5 before the close. That is saying that we're going to hit it. We'll probably hit it tomorrow morning. And that is saying, I suspect when we look at Amazon, it's like, okay, that brings the probability higher that, in fact, and there's more than Amazon coming out with numbers, but all in all, that would put the fact that you're going to get lower numbers coming at you. Now, if we go over and we take a look at the NASDAQ NDX 100, we have the same deal inside the NDX 100. That also broke a B point intraday, broke it with volume. We've hit the 8.4, and this is interesting. See, the NASDAQ almost did it. Ooh, isn't this interesting? The NASDAQ, when we started the program, folks, we're at 607. We went down to 4584. It's 4580. That was the number. And if you want to see how you get these high volume swing points get tested, that test out here, if you were with us this morning when I was on the air this morning, I was bringing up the fact that that high volume swing point from the open yesterday was going to get tested. Well, we just tested it. That high volume swing low was 88. We just broke it with 84. And you had lighter volume. Now the key is going to be, do you stay under that level? Because that was monster volume over there. Or do we build some more cars to go after that level once again? My take, the larger take, is that the way this market has accelerated down today, you have monster volume coming in. You have the price spread. This is saying to me that we're actually going to follow through today, and more than likely what you're going to see a follow through tomorrow to the downside, and that in itself is going to be pretty dangerous. That I suspect will be dangerous, and one of the main reasons that would be so dangerous is the aspect of that you're at a price point right now that let me see. I believe the NASDAQ Composite is just making its way, or trying to make its way back into. Yeah, so the composite right now, let's look at this. The composite right now is at 51.46. And it'll be 51.19. 51.19 gets you back into the lower range. The actual 5042, so another 100 points really gets you into the lower range. So we'll see where that shakes out. We're already under the last swing point up here, which is the 5162. Inside the NDX 100, we take a look at that NDX 100, and the NDX 100 is at 4603. That has to get down to 4562. Let's go take a look at United Rentals. This is getting taken apart. What's intriguing about this is that this is almost like we're not doing any more infrastructure business or something. This is going to be a monster ABC down. We've done 12 million shares out here. On the weekly basis, you're taking apart a weekly ABC structure on the way down. So your A point is 119. Your B is 81, $40. There you go, $38. That gives you 7. Oh, it's already done it, actually. 105. Yeah. It's finishing an ABC down. Finishes on a weekly. That means we're going further than that, though. We're going... Yeah, this URI is going into... No, we're at $67, $65 a game. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get ExxonMobil down 76 cents. Caterpillar's off 2.30. Big Blue is up $1.46. You got Walmart down 65. GM is up $1.24. 3M is down 6.03. Let's go look at 3M and see what the heck's going on there. This little baby's getting hit pretty good. Okay, so 3M's trading out at 149.30. Oh man, holy cow. Okay, so we put this on a weekly. You get 3M, off its highs of 170. You're at 149. We know where we're going, folks. Where do you think we're going? We're going to the October 2014 swing point. That's where the baby's going. There's you have 148 in its way. That's where we are right now. So it drops out of bed. You get 148 in its way. But what you also have is you have a monster ABC down. This is so 163 is your A, right there. Your A, I'm using the A point from May of 2015. 163 is your A. 152. So you get 11 points, which gives you 146. We're at 149. You know, that's a 1-to-1 ABC. Now, if you get to 146 and we get into that bar, the bar we're talking about is October 2014. Bottom line is that, you know, we'll see whether the highs of the lows hold the baby. But thus far, that baby is coming down, and you're coming down with some real juice behind it. Caterpillar, we go take a look at Caterpillar. Caterpillar out here, let's go take, she is trading down 76. And she's breaking swing points with volume too. Man, there's ABC structures down all over the place. Where do you see this one? Whoa, baby, this is a mess. Okay, Caterpillar, wow. Conservatively, my God, 106 to 78. You're talking about what? That's 27 bucks. That's going to bring you into $60. You're at 76 right now. Let's see what's at 60. We'll put this on a monthly basis. She's already at $67. Bring this back about. $67 is a high. Yeah, it's a high volume swing low. Let me take a look at this. That's a high volume swing low from. Now check this out. This isn't the October 2014 area. That's already blown that away. This is October of 2011. That's where she's going. She's got a high volume swing low, $67.54. And if she doesn't hold that, then you're talking about going right into that 2008 level. So there's you get some heavy destruction out there. And just to refresh your memory, folks, okay, as to where the S&P is at that level. And this is what this is all about. Just put stops in, folks. That's the real bottom line. Your long-term investor you're going to be in, don't take the heat because it's not worth it. We're at 2101, and when you're talking the October swing area, you can take the high of that. The high of that would be 1912, which is what? That's still down 200 points or 2,000 Dow points. The low of that is 1820. Plenty of these stocks have gone to the low. We're going down there. You know, when you look at the Dow Industrials right now, the Dow Industrials basically are back. I think we're back to November of 2014 right now. That's the way I think this thing is set up. We've been going sideways for a long period of time. And when you do go sideways for long periods of time, what that sets up huge distribution, folks. That's what it's about. But at highs, the longer you stay at highs, the longer the sideways move. Bottom line, that's all about distribution. You stay right there, folks. We're going to be coming back with lots of numbers after the close. Dow right now is down $1.29. Nasdaq's off 28. S&Ps are down 14. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We had the Dow Industrials down 119, Nasdaq off 25, S&P's down 10.5, gold contract down $3.10, trading at $1,088 an ounce. Silver down 11 cents at $14.61 an ounce. Platinum off $4.50 at $9.76 an ounce. Copper down 5.5 pennies at $2.37 a pound. Light sweet crude off 55 cents at $48.64 a barrel. bonds. The ever-ready bond market, folks, want higher price. They have the price spread. They have the accelerated volume. 10-year up 10 ticks today, 126.20. 30-year up 1.5 points, 154.18. King dollar. King dollar down 467 ticks at 97.25. The euro up 63 at 109, and the yen down 14 at 123.82. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of equities, folks, we're going to have a slew of numbers coming out any minute. Amazon's going to be one of them. And you talk about Amazon being jumpy. This is pretty wild. So we're at 408, right? Since the market's closed, Amazon had closed out at the let me get the exact number for you, because this is wild watching this thing shake out. So Amazon closed at 482. Well, you talk about placing bets about what way Amazon's going to go, folks. This is what you had. Amazon thus far has traded from 476 to 493, and they didn't come out with their numbers yet. This is just absolutely amazing. So let's go over to the S&Ps first. So what do we have? We take a look at the SPY. What you have happening in the SPY is this. SPY closed out the day. There she is. SPY closed out the day at 210.14. Market's rolling over, and we've done 87 million. We are at the 210.18. That is saying, okay, you're going to make the shot now for the 207.98 area. NDX 100, we take a look at the 3 Qs. What we have with the 3 Qs is this. 3 Qs trading at 112.20. You did 22 million shares out here, and that's light volume, by the way, for the 3 Qs. That is going to get intriguing, okay? Because we did close under the low of yesterday. The low of yesterday was the 112.16. No, we're right at it, 112.20. So this is a real uptake on this baby. So the Amazon, Starbucks, SBUX, that is going to basically dictate where these Qs are going to go right now, because that is a pullback into that area, and it is a pullback with lighter volume. So you can get a little pop inside those NQs. That's how that thing is shaking out, folks. Gold contract. What do we have with gold? Gold contract. This is what we have happening in the gold contract. Gold contract is trading at 1087. We're coming into a Friday, and what is going to be wide open out here tomorrow, sad but true, is the test of that 1080 area. Close that. Is that 1080 area from Sunday night. That's the way this is shaking out. 1080, bottom line, we hit it Sunday night. When you're coming into this baby right here, there's no doubt that this she is, okay, that baby's going to get tested. Now, let's go over to Amazon again. I believe Amazon just came out with numbers. Amazon, let's see, AMZN, let's see if she did. Oh, my God. Yeah, she gapped again. She gapped all right. Whoa, baby. Okay, so Amazon, there's a 3-gap play for you. Unbelievable. Okay, Amazon closed at 482, and it's up $100. That's the gap. It's trade. That's a gap. That's the bottom line. You're at 544 right now. This is the numbers on Amazon AMZN. Let's go take a look at them. So numbers on Amazon go like this. They were expecting a 14-cent loss. They had a 19-cent gain. Let's see. Okay. Their sales are up 20%. Man, imagine sales are up 20%. That's amazing. Sales are up 20%. North American sales were $13.8 billion. International sales, $7.57 billion. Their operating margin is 2%. They see the expected earnings are going to be $23 billion. $billion? Yeah. Yeah. No, sales are $23 billion. Sales are $23 billion. Bottom line is that you got an expansion with price in an incredible way. There's no two ways about it. And what that just did, what that just did to the NQ. So here, take a look at this. Oh my God. We go from NQU5. What you're going to see is that the NQs just went from, we closed out at the 95 area, and they just went up $30. Right now, the NQs are trading at 4624, and the low that was established out here at 330 was 85. Starbucks, SBUX. Let's take a look at Starbucks and see what we have at Starbucks. Starbucks closed at a price point of 56.56. That's trading at 58. Numbers on Starbucks go like this. The estimate was 41 cents. They made 42 cents. Their revenue, $3.4 billion. Revenue is down 9%. You know, bottom line is that they made their numbers, and that baby is trading up a buck. A lot more numbers are going to be coming out. Let's go look at Computer Associates. I think that just come out. Is it I don't even know if is it. No, CA Inc. They design, market software products. That closed at $29. That is trading right now at $29.30. And numbers go like this. Their revenue, the estimate was $3.98 billion. They're going to do $4 billion. Top line, the bottom line. They beat their bottom. They beat their bottom line. They didn't beat their top line. This is Tom O'Brien. This is TFNN. Stay right there, folks. We're going to be coming back with our man, Mr. Chris Gaffney, president of Everbank World Markets. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials closed down 119. You had the Nasdaq off 25. S&Ps were off 9.5. And we have our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets. Now, as you come over to our website at TFNN, you're going to see the banner right on the right-hand side. As you hit that banner, it's going to bring up the Everbank site. When you bring that up, what I'd like you to do is hit Investing. As you hit Investing, go to under Diversify and Conquer. Go into Market Safe CDs. What Chris and I are going to be talking about is this is a new Market Safe. It's the Power Metal CD that is back. It has got extended to August 17th. The key features are that you only need $1,500 to open it. You can open it with as much money as you want, $1,500 to open it. Your principal is protected 100%. There's no monthly account fee. It's FDIC insured and IRA eligible. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. Great to be here.
Absolutely, man. And, I walked through, the principal protection, no doubt, is a huge deal, particularly, because it seems like everything's going down these days. It's almost like a liquidity event again, really. Do you know what I mean?
Well, today we got a little bit of a bounce. This morning we were looking like we were going to get a little bounce on the metals just because they were oversold. But, there's a lot of pressure on the metals markets, and really, at some point you've got to think this thing is going to reach a bottom. And especially with the amount of liquidity that's being pumped into the markets by these central banks. And the U.S. Central Bank, the ECB, is now doing quantitative easing. We've got Japan just throwing money at their markets. And again, all that money sloshing around eventually is going to lead to an inflationary environment. Now, that may not happen tomorrow. It may not happen by the end of the year. But again, this is, our CD has a 5-year term, and a lot can happen in 5 years. And so I think it's a great way for investors looking to benefit from, possibly a bounce in these metals markets.
I think right now, we know, folks, okay, inside the investment business there's never any guarantees, okay? But what's so cool is that, the metals and have got hurt, okay? And it's so cool that it's a 5-year term, okay? And just as you said, it's like, okay, we know that the paper is getting pushed in the market like in an extraordinary way and has got pushed in the market in an extraordinary way for a long period of time. We also know that you have the metals that definitely gold is now under production cost. So it's like, okay, how long is that going to go on? So can you explain to the folks, what's so cool here, folks, is this. This is a CD product, okay?
Right.
It's a CD product. You get your principal guaranteed, and there's no such thing as that if you're going to trade metal. So if you can just explain, right? I mean, it's amazing.
Right, and that's another, you pointed out, it is IRA eligible, and that's why this is a great product for IRAs because, again, return of capital is as important as return on capital for IRA investments. And this one, again, is an FDIC-insured CD. Your principal is guaranteed. How the CD is going to work is every year we're going to set the price of gold, silver, and copper and establish what that increase is compared to the original pricing on the original pricing date. Those returns are going to be capped at 45% each year, and then at the end of the 5 years, you're going to get the average of those returns over that 5-year period. So we're going to average those 5-year returns for each of the three metals. And again, your upside will be capped at 45%, but again, but your principal is protected. And so if the metals go up, anywhere between 0 and 45%. That's going to be your return on this CD.
Which is huge. I mean, you know, the bottom, I don't know what the exact number is on a 5-year CD right now, but it's certainly not, 7.5%, 8%.
Yeah.
You know what I mean? Yeah, exactly. And what we're talking here, folks, is this, okay? What they do, the basket of metals we're talking copper, we're talking silver, and we're talking gold. You know, so when you take a look at those aspects, when, like anything else, when you're buying things, when they're down versus up, and you have a longer period of time, and you get your principal back. I guess as many times as it's getting your principal back, that seems to be the best thing in the world, right?
Right, and we just had a diversified metals CD, a similar structure. It didn't have copper. It had some other metals. It was a different combination of metals. But again, the metals markets were volatile during the time period of this diversified metals CD that had recently matured, and those clients ended up with a positive return, even though metals prices had dropped back below where they were initially when they invested into the CD. So there is an averaging, which also helps if the markets are very volatile during the term of the CD. And again, it's an opportunity to get into the metals markets when they seem to have some value right now.
Yes.
I mean, they've been hit hard, as you point out. I think it's a bit of a contrarian trade right now, in that I think everybody's running away from the ETFs. I know the gold GLDs are what shrank to the lowest level since 2008 as far as holdings on that today. So,
what's intriguing is that they, Andy and I were talking about this earlier. I had him on earlier the last hour, and it seems that the commodity downdraft, no doubt, has to do with China. But like I had said to Andy, and like there's nothing that's getting less expensive in the United States. I mean, we're not in a deflationary era. I mean, whether it's schooling, whether it's food, I mean, whether it's housing, things are going up. So it's like, there's a nice differential there also as to what commodities are doing deflationary versus what we're actually doing here.
Right, and again, I think just for the longer term, we'll look back at these levels and probably think, boy, that looked pretty cheap. Now, can they get cheaper? Yeah, I just was speaking to a Bloomberg Metals reporter this morning and talking about metals markets and how, there's a possibility when we get an interest rate increase here in the later part of the year that you're going to see the dollar get even stronger and precious metals maybe get even cheaper in here. But again, the key is what happens over 5 years. So,
it absolutely is.
It's an opportunity to get invested into what can be a very volatile market with principal guaranteed. And again, I can't stress that enough that getting into an FDIC-insured CD product that's going to have an upside potential based on metals, but which is principal guaranteed, is something that's pretty unique, and we're real proud to offer it for investors.
Absolutely. And folks, you can just come to our website and you can hit the banner. You can call 855-750-4051, or you can go to everbank.com/TFNN-CD. Chris, you have a great one, safe one. Thanks so much. And you have to act here, folks, before August 17th. So you have plenty of time to act before August 17th.
Right.
You have a great one, safe one. Look forward to speaking to you again, Chris.
You bet. Thanks.
Okay, thanks. You stay right there, folks. We'll be coming right back. This is Tom O'Brien. This is TFNN. A lot of numbers are coming out, folks. If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease, no worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, don't forget, if you'd like to take advantage of the Market Safe CD, you can come over to our website at TFNN, see the Everbank banner on the right-hand side. When you hit that, hit Investing, and then you can hit Market Safe CDs. Another way you can do it, just go to everbank.com/TFNN-CD. Now, market-wise, Amazon closed at 480. It's trading at 566. Monster number, no doubt. Next one out of the SWKS. Let's take a look at Skyworks Solutions. Skyworks Solutions, let's see what she's doing, where she is right now. This little baby. Okay, so Skyworks closed at 103. This is bouncing all over the place. This is trading at 105.73 right now. Numbers go like this with Skyworks. Well, first off, Skyworks, folks, semiconductor company, they are a supplier of Apple. More than that also, but they are a supplier of Apple. The revenue was $810 million. Their earnings per share was $1.34. Going forward, they are claiming that they're going to make $151, and the estimate is $142. Their revenue beat, and their earnings per share also did beat. Next up, we have ALGN. Let's go take a look at Align Technology. This little baby closed at 65. That's trading right now at 60. Let's see what this baby looks like. ALGN. So they design, market. This is the tooth system for instead of braces. This closed at $65.59. It's trading at $60 right now. Numbers go like this. Their revenue was up 8.8%. They missed their earnings per share missed and the revenue missed, both. There's been a huge amount of revenue misses, folks, in the last few days. TripAdvisors, let's go take a look at that. TRIP, TripAdvisors, that closed at 93. That's trading at 89 right now. Let's see what they have to say. TripAdvisors, so their earnings, the adjusted earnings per share were 54 cents. They took in $405 million. Their Latin American revenue, their sales, the sales were up 25%, but they didn't make their earnings and they didn't make their revenue. They didn't make both of them. So that baby is down $5, and that's not the end of the world because this equity has been up pretty good. This equity, well, actually, no, it's a dead cat bounce. Interesting. So it just ran from 63 to 99. I mean, 63 to 94. Now you're back down to this 89 number. Visa. Let's go take a look at Visa. Visa closed at $71.75. That's trading right now at 76. And we're in the world of plastic, folks. There's no two ways about that. Let's see. I think she's breaking out to new highs. Yeah, she's breaking out to new highs. Visa's breaking out to new highs. Numbers on Visa. So the estimate was 58 cents. They made 74. Wow, that's a big number, man. That's the bottom line. Top line estimate, $3.36 billion. They took in $3.5 billion. No, 3.3. The estimate was 3.3. They took in 3.5. So big number, big number. ALK, Alaska Airlines. Let's see what good old Alaska Airlines doing. That had closed at 73.79. She looks like she's trading. She was down a couple dollars anyway. She's trading just about the same deal. Estimate was $1.73. They made $1.78. The capacity was up 10%. Yes, not a bad number there. SBUX. Let's go see what good old Starbucks. Starbucks was on. It has been on a one-way deal. SBUX. I mean, for an incredible amount of time too. Starbucks closed. Starbucks closed at $58. No, $56. It's trading 58 right now, and Starbucks, the estimate was 41 cents. They made 42. Sales comp was up 3%. The estimate was going to be up 3.7, so they missed out a bit. Their revenue, they just made the revenue. The estimate was $4.87 million. They came in with $4.88 million. Maximum integrated, MXIM. Let's go take a look at this baby. That closed at $30.70. That's trading up $1 right now. XIM. Okay, so let's see what this one did. This one, their margin, this is nice margins. 51 to 54% margin. They earnings per share was 39 cents. They no, one second. First quarter. Okay, so they missed their numbers. This is interesting. So they missed their numbers, but it's still up. Let me see what this is looking like chart-wise. I see why. Okay. So this one here, this was a dead cat bounce. This equity had just come down from the top at 36. It was at 30. They missed their numbers, but evidently maybe they came out with a warning before that structure. Our phone number is 877-927-6648. Good old Ma Bell. Ma Bell's coming out with numbers too. Let's see what Ma Bell's doing out here. Look at that. Ma Bell's got some real movements. Let's see what she closed at 33. She's trading at 34.50, which, by the way, is really hard to do. That's a monster stock. That estimate was 64 cents. They came out with 69. So big number. That is a big number. There's no two ways about that. They say repositioning of smartphone base is nearing completion. and it tops it by 5 cents. Ma Bell right now 34.70, and 34.70. She'll make a run again for this 36.45, which was the high that was generated in June. And if she can break that baby, she has a chance to get into higher price. And with Ma Bell, of course, what you're dealing with is that you have an equity that is pushing a dividend of 5.5%. So that's certainly a big number. Let's go back over to Amazon and give you some numbers on Amazon, because Amazon AMZN was up like $85. Let's see what we're up right now. Okay, so she's up $90, $80. Amazon's second quarter topped analyst estimates by its fast-growing cloud computing business. Revenue jumped 20% to $23.2 billion. Net income was $92 million or 19 cents a share, compared with a prediction of a loss of 14 cents. Bottom line, Bezos decided we're going to make some money. We're going to show the world that, guess what? We're going to be the largest, meanest, toughest, not meanest because they're nice, retailer out there. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And it's going to get interesting watching the competition that Apple Pay is going to have in the retail market. Now, I'm not even sure whether Apple Pay has got any traction. But this is something that one of the large department stores with a Walmart leading the charge with Target and Best Buy. So check it out. After 3 years in development, the retail industry's answer to Apple Pay is finally getting off the ground. A mobile payment application developed by Merchant Customer Exchange, a company founded in August of 2012, with funding from Walmart, Target, and Best Buy, has been tested by employees of the retailers and will get a limited trial run next month in the stores. That means shoppers will soon be able to use the technology called Currency to pay for items with their phones. The challenge for Currency now is playing catch-up against established apps from Apple, Google, and others, as well as explaining to customers why they should bother using it. When Apple Pay rolled out last year, Currency was derided by critics as a low-tech alternative that retailers supported because it would give them tighter control over shoppers' transactions, which I suspect that's absolutely a truth statement. Customers will also need assurance that the technology is safe, given the high-profile data breaches at retailers over the past few years. There's no doubt about that. Currency itself was already hacked last year during an early test. Merchant Customer Exchange, known as MCX, expects to formally introduce the current app sometime in the third quarter, a spokesman for Lowe's said, which is part of the consortium. Lowe's, however, won't be part of the initial rollout. At stake is a fight over money and customer data. Retailers have long authored paying fees to accept credit cards in their stores. That led to battles on multiple fronts, including multi-billion-dollar lawsuits. Retailers, let's see. While MCX is getting closer to releasing the app, there are plenty of hurdles. It hasn't signed major deals with major credit card companies like Visa to use bank-issued card accounts within the app. That means that a shopper wouldn't be able to use, say, a Visa card from JPMorgan Chase. This can be done with competing products like Apple Pay. Instead, users of MCX's app will be limited to private label store cards like Target, Red Card. There's no way this thing's going to fly. The mobile payment field is also, I suspect it's not going to fly. To change what you can see by Visa out here today, right, is that the Visa, MasterCard deal not only works, folks, okay, what seems to be happening, and I was bringing this up yesterday, is that it's getting larger, faster, in a huge way. And I think one of the main reasons is this. And if I bring American Express up, American Express come out with numbers. They didn't make their numbers. Now, they lost Costco, which was a huge account. American Express is trading at 77. It's off its high of 95. Now, it's trading down with volume. It looks to me that, when you look at Visa, you look at MasterCard. Let's see what MasterCard's trading right now. Visa is a monster. MasterCard is up at, my God, yeah. You're at 95.16. That's probably up after, yeah, now it's at 97.55 because Visa come out with numbers. And we bring this back on a monthly, we bring it back on a monthly basis. These are at highs. And I suspect why it's at highs is this. The card companies themselves have changed quite dramatically. And one of the major movers inside the card companies is JPMorgan Chase. We all get, 1 million solicitations in the mail for credit cards. It's just like it was, 10 years ago. The difference that I'm seeing is this, is that they've definitely got creative on some of these reward cards, and they've expanded the limits dramatically. So American Express would be the first one to get hit on that, and they are getting hit. That's the first part. The second part actually has to do with why do you need, another card if you got a couple cards? I mean, I just don't see the need that you have 5, 6, 7 different cards for different things. I mean, if you want to stay organized, a couple cards are great. Bottom line, just in case one card doesn't work, they're claiming it doesn't work, or what all of that. But I think what you get with the cards in general is that whether it's Apple Pay, Google Pay, and all the rest, they're going to have a lot harder time getting traction. What does happen with the Google Pay, what you do is you actually put your credit card in anyway. You're paying with your phone, but it's your credit card that I think gets hit. I haven't used I used Starbucks for a while, And that worked well. The Starbucks deal, I liked how that worked. Volume-wise out here, this is what we had on the NYSE. NYSE came down with 857 million shares. Inside the NASDAQ, we came down with 2 billion shares. What is intriguing out here after the close, so let's watch this thing. You get the NQs open again, but the NQs, they were down $40. Amazon come out with numbers, pops up $80. That takes the NQs from negative to positive. Now we're up $13. 13's not a huge amount. That's not a huge amount because if you just see this correlation inside the Qs had closed at 112.20. That's trading at 113, and that is saying that tomorrow will and 113.10 was the high of today. So it didn't even get to the high of today. So the Qs are going to need more than Amazon in order to basically get up into higher price. And we'll see where Apple shakes out and says and does, because Apple certainly is going to have a higher impact if it trades down at all. The other wild card out here, which continues at highs, is the IBB. The IBB, folks, which is a biotech index, that baby is just refusing lower price. It's hanging up at that highs. What we are going to see, though, is starting next week, all the numbers are coming out. You have Amgen on the 30th. We have Biogen on the 24th. Oh, that's tomorrow, the 24th, Biogen. Celgene is on, these are the numbers coming out. Celgene, that's on the 23rd, too. That's pretty cool. REGN. So we're gonna get a taste of this tomorrow. Regeneron is on the August 4th. Gilead is on the 28th. So we're going to have a few of them start tomorrow. Next week is going to be the slew of numbers inside the IBB. The Starbucks trading up about $1.50, which isn't bad out here. Let me go look at Walmart because I'm curious about. So Walmart's trading. Let's go look at Walmart. Because Walmart and Amazon. Could you imagine being an executive at Walmart right now, seeing those Amazon numbers? They're sitting there like, oh, man, you got to be kidding me. They knew they were a monster, but that is a big number. So if you take a look at Walmart, Walmart's off its high of 92. You're at 72 right now. That little baby is going to go after its lowest swing point again. And you got to remember, 70.25 gets Walmart in the lower range once again that it took 12 years to break out of. It stayed out of that range now for 3.5 years. You get back in that range, and that's saying that Amazon is just going to make it so easy that we sit at home and get stuff delivered for $0. Delivery charge, that is. It's Tom O'Brien, it's TFNN. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Ma Bell, that also topped estimates as it gained customers, as gains in tablet customers cushioned the loss of phone subscribers. Second quarter earnings, excluding some items, was 69 cents. That exceeded the 64 cents average from the analyst. With DirecTV, Ma Bell would become the top U.S. pay TV producer, provider, and expand its business beyond increasingly saturated wireless communication carriers. The company added a total of 410,000 monthly subscribers, while the company lost 200,000 phone subscribers. It made it up with more than 600,000 new tablet users. That's interesting, tablet users. Analysts projected a loss of 117,000 phone companies and a gain of 552,000 tablet subscribers. Revenue was $33 billion. It's pretty wild. I guess tablets definitely are not pushing out the phones, I don't believe, but I guess video is the name of the game here. Anob, Airbnb, that Airbnb, it's going to get interesting watching how they shake out, meaning coming public, because what they're looking at right now is that they're looking at hiring the CFO. Well, actually, no, he's not the CFO of Blackstone, but he's a big dude at Blackstone, Lawrence Tosi. Anob hasn't had a CFO since last year. But this, if in fact, yeah, no, he is. Tosi's the CFO of Blackstone right now. Bottom line is that that is saying that Airbnb is getting ready to get up and go public. They're in talks right now for a $24 billion valuation. Now, it's interesting, you know, I haven't used Airbnb. We always HomeAway, VRVO. But those sites definitely are changing the whole structure of how folks go on vacation, go do business, and all of the above. There's no two ways about that. And they get themselves a good VIG. So on HomeAway, what happens, folks, if you just get a normal posting, what ends up happening, it's about $200 or $300. If you want to be at the top of the post, it's normally cost you about $9.95 to $1,200. If you're doing that, what you want to do first is this. You go on, you're going to put the zip code in where you're trying to basically push a product out, right? So if you have real estate, whether it's a city product, a beach product, whatever, put the zip code in so that you see what the competition is, how many you have. Because we have a lot of different places, and what ends up happening is this. If there's not a lot of places inside your zip code, because they get it down by zip code, guess what? You don't have to pay the top amount. to get to the top of the page. You know, we have a few that only have like 50 in it. You know, that's a no-brainer. You can basically get up to the top pretty easy. Some of them have 300 or 400 or 500 in them. That case, you want to pay the top dollar if, in fact, you're doing this on a full-time basis to push that product out. Because it makes the difference in an incredible way. It's just like when you Googling anything, you want to be the first one that comes up with you know, the pushing out of products. It's a good deal. Airbnb is, I guess in Paris they're changing quite a bit because downtown Paris, just about everyone is renting their places out using that model. And, you know, the hotels are going bonkers, and you can't blame them, you know, because the bottom line is that in the hotel business, that is a big number. Now, in Florida, what ends up happening, where we are, you make it we basically file for it and we pay taxes on it. You know, that's why Florida can make so much money. You stay right there, folks. The man, Mr. Andy Heck's going to be coming up next, growling a problem with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one. Have a safe one. Stay there, right for Andy's coming right up, folks. Go get him, folks.